Real Estate A1 TV executive producer, director, author, chief editor, real estate professional, multidimensional, and multifaceted artist Dr. Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. The topic is Real Estate Glossary of Terms. Closing. Closing is the last step in a real estate transaction, typically used most often in buying a property. On the agreed-upon closing date, the property officially transfers ownership from the seller to the buyer. Contingency. A contingency is part of the agreement that must be met, otherwise the other party can cancel the contract. For example, a buyer interested in a home may place an offer that is contingent upon the building being cleared by a certified home inspector. If it isn't cleared, the contingency has not been met, and the buyer can negate the agreement. Cash-out refinance. A cash-out refinance is when a homeowner refinances their mortgage for more than it's worth. You typically hear about homeowners refinancing to a shorter term to pay off the loan faster, or for a longer term to reduce their monthly payments. In this case, they refinance a new loan that is more than what they currently owe, to cash out the difference and use that money for something else, like home remodeling. Co-borrower. A co-borrower, like a co-signer, is typically a close family member or friend of the borrower who legally promises to pay their loans if they're unable to. For example, someone with a low credit score may have difficulty getting approved for a mortgage, so adding a co-borrower on their behalf can help them qualify. The co-borrower guarantees the loan and has the same legal responsibilities as the primary borrower. Cost of Funds Index, COFI. COFIs are the average interest rates on checking and savings accounts in a particular regional area. Banks use them and other lenders to determine variable interest amounts for loans. Co-borrower. Commission. Cap, for an adjustable rate mortgage, ARM, a limitation on interest rate or mortgage payments may increase or decrease. See also lifetime payment cap, lifetime rate cap, periodic payment cap, and periodic rate cap. Capacity, your ability to make your mortgage payments on time. This depends on your income and income stability, job history and security, your assets and savings, and the amount of your income each month left over after you've paid for your housing costs, debts, and other obligations. Cash-out refinance, a refinance transaction in which the borrower receives additional funds over and above the amount needed to repay the existing mortgage, closing costs, points, and any subordinate liens. Certificate of deposit, a document issued by a bank or other financial institution that is evidence of a deposit, with the issuer's promise to return the deposit plus earnings at a specified interest rate within a specified time period. Certificate of eligibility, a document issued by the U.S. Department of Veterans Affairs VA, certifying a veteran's eligibility for a VA guaranteed mortgage loan. Chain of title, the history of all the documents that have transferred title to a parcel of real property, starting with the earliest existing document and ending with the most recent. Change orders, a change in the original construction plans ordered by the property owner or general contractor.
Real Estate A1 TV executive producer, director, author, chief editor, real estate professional Kashif Sohail, and our entire team of hundreds of presenters want to educate you about real estate. Let's continue. Clear title, ownership free of liens, defects, or other legal encumbrances. Closing, the process of completing a financial transaction. For mortgage loans, the process of signing mortgage documents, dispersing funds, and, if applicable, transferring ownership of the property. In some jurisdictions, closing is referred to as escrow, a process by which a buyer and seller deliver legal documents to a third party who completes the transaction in accordance with their instructions. See also settlement. Closing agent, the person or entity that coordinates the various closing activities, including the preparation and recording of closing documents and the disbursement of funds, may be referred to as an escrow agent or settlement agent in some jurisdictions. Typically, title companies conduct the closing, escrow companies, or attorneys. Closing costs, the upfront fees charged in connection with a mortgage loan transaction, money paid by a buyer and or seller or other third party, if applicable, to effect the closing of a mortgage loan, generally including, but not limited to, a loan origination fee, title examination and insurance, survey, attorney's fee, and prepaid items, such as escrow deposits for taxes and insurance. Closing date. The date on which the sale of a property will be finalized and a loan transaction completed. Often, a real estate sales professional coordinates the setting of this date with the buyer, the seller, the closing agent, and the lender. Closing statement, HUD 1 settlement statement. Co-borrower, any borrower other than the first borrower whose name appears on the application and mortgage note, even when that person owns the property jointly with the first borrower and shares liability for the note. Collateral, an asset pledged as security for a loan. The borrower risks losing the asset if the loan is not repaid according to the terms of the loan agreement. In the case of a mortgage, the collateral would be the house and real property. Commission. The fee charged for services performed, usually based on a percentage of the price of the items sold, such as the fee a real estate agent earns on the sale of a house. Commitment letter. A binding offer from your lender that includes the amount of the mortgage, the interest rate, and repayment terms. Common areas. Those portions of a building, land, or improvements and amenities owned by a planned unit development, PUD, or condominium projects homeowners association, or a cooperative projects cooperative corporation, used by all unit owners who share in the common expenses of their operation and maintenance. Common areas include swimming pools, tennis courts, and other recreational facilities, as well as common corridors of buildings, parking areas, means of ingress and egress, etc. Comparable. An abbreviation for comparable properties, which is used as a comparison in determining the current value of a property being appraised. Concession. Something given up or agreed to in negotiating the sale of a house. For example, the sellers may agree to help pay for closing costs.
Real Estate A1 TV executive producer, director, author, chief editor, real estate professional Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Let's continue. Condominium, a unit in a multi-unit building. The owner of a condominium unit owns the unit itself and has the right, along with other owners, to use the common areas, but does not own the common elements, such as the exterior walls, floors and ceilings or structural systems outside the unit. These are owned by the condominium association. There are usually condominium association fees for building maintenance, property upkeep, taxes and insurance on the common areas and reserves for improvements. Construction loan, a loan for financing the cost of construction or improvements to a property. The lender disburses payments to the builder at periodic intervals during construction. Contingency, a condition that must be met before a contract is legally binding. For example, home purchasers often include a home inspection contingency. The sales contract is not binding unless and until the purchaser has the home inspected. Conventional mortgage, a mortgage loan not insured or guaranteed by the federal government or one of its agencies, such as the Federal Housing Administration, FHA, the U.S. Department of Veterans Affairs, VA, or the Glossary. Rural Housing Service, RHS. Contrast with government mortgage. Conversion option, a provision of some adjustable rate mortgage, ARM, loans that allows the borrower to change the ARM to a fixed rate mortgage at specified times after loan origination. Convertible ARM, an adjustable rate mortgage, ARM, that allows the borrower to convert the loan to a fixed rate mortgage under specified conditions. Cooperative, co-op, project, a project in which a corporation holds title to a residential property and sells shares to individual buyers, who then receive a proprietary lease as their title. Cost of funds index, an index used to determine interest rate changes for certain adjustable rate mortgage loans. Counteroffer, an offer made in response to a previous offer. For example, after the buyer presents their first offer, the seller may make a counteroffer with a slightly higher sale price. Credit, the ability of a person to borrow money or buy goods by paying over time. Credit is extended based on a lender's opinion of the person's financial situation and reliability, among other factors. Credit bureau, a company that gathers information on consumers who use credit. These companies sell that information to lenders and other businesses in a credit report. Credit history, information in the files of a credit bureau, primarily comprised of a list of individual consumer debts and a record of whether these debts were paid back on time or as agreed. A credit bureau calls a credit report when you are provided your credit history to a lender or other business. Credit life insurance, a type of insurance that pays off a specific amount of debt or a specified credit account if the borrower dies while the policy is in force. Credit report, information provided by a credit bureau that allows a lender or other business to examine your use of credit.
Real Estate A1 TV executive producer, director, author, chief editor, real estate professional, multidimensional and multifaceted artist Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Credit score, a numerical value that ranks a borrower's credit risk at a given point in time based on a statistical evaluation of information in the individual's credit history proven predictive of loan performance. Creditor, a person who extends credit to whom you owe money. Creditworthy, your ability to qualify for credit and repay debts. Covenants, conditions and restrictions, CC and RS. Usually, these are the rules and regulations placed on real property by a homeowners association, HOA, a neighborhood association, a developer, or a builder that sets forth any requirements and limitations of what a homeowner is allowed to do with the property. It may also include monthly and/or annual fees or special assessments. Conventional sale. A conventional sale is when the property is owned outright, has no mortgage remaining, or the owner owes less on their mortgage than what the market indicates the owner could sell their property for. Such conventional sales are often smoother transactions than non-conventional sales, such as foreclosures, probate-related sales and short sales. Closing. Closing is when the home sale is considered final, which typically includes all parties' signatures on all required documents, all monies conveyed, and when a lender is involved, with full lender's approval. For some markets across the nation, recording the deed with the county clerk's office is the ultimate and final step of closing. Once all these items are completed, a buyer's access to the property is then provided, and the buyer is considered the new homeowner. Closing costs. Closing costs are various fees, including fees charged by a lender, the title company, attorneys, insurance companies, taxing authorities, homeowners associations, real estate agents, and other closing settlement-related companies. These closing costs are typically paid at the time of closing a real estate transaction. Capitalization rate, or cap rate, a metric used in real estate to evaluate the potential return on an investment property. Cash reserves, money set aside or saved by an individual or business in case of an emergency. Closing, the process of finalizing a real estate transaction. This includes finalizing mortgage agreements, paying applicable transaction fees, and signing on the dotted line to close the deal. Closing is the final step in executing a real estate transaction. It is when official ownership and payment are transferred to the rightful parties. Closing usually takes place after a purchase agreement is made and the title is now ready to be transferred. Closing costs, the fees associated with finalizing a real estate transaction. Both the buyer and seller will have expenses during the closing process. Closing costs normally include an application fee, inspection fees, homeowner's insurance, property taxes, and the agent's commission. Commercial leases, a leasing agreement specific to commercial real estate. There are 7 types of commercial leases that real estate agents should familiarize with. Comparable, or comp, a term that refers to the prices of recently sold properties used to determine market value of other similar properties. A seller will refer to these comps when trying to figure out what their property is worth. Real Estate A1 TV executive producer, director, author, chief editor, real estate professional, multidimensional and multifaceted artist Dr. Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Comparative market analysis, a process used to determine the value of a home based on the sale prices of similar properties in the area. Contingency, a condition that must be met to finalize a real estate contract. Contract, a written and legally binding agreement between a buyer and seller outlining the details of a real estate transaction. Curb appeal, the appearance and attractiveness of a property's exterior. Capital gain. Capital gain is the profit from the sale or auction of property or investment. Capitalization. Capitalization is the conversion of assets or income into capital. Capitalization rate. Cap rate is used to indicate the return expected to be generated on a property. Caveat emptor. Caveat emptor is Latin form let the buyer or buyers beware. The concept is that the buyer is responsible for checking the quality of a product before a purchase is made. Ceteris paribus. A Latin phrase meaning other things equal or in plain terms all things remaining constant. Chattels. Another word for personal property. Co-op. A co-op is a non-profit corporation, complete with a board of directors, and each resident is a shareholder. Perhaps the largest distinction between a condominium and a co-op is that most co-op associations require a prospective purchaser be approved by a committee composed of current co-op owners. Co-ownership. Co-ownership is when a title to one parcel of real estate is held by two or more individuals. These parties are called co-owners or concurrent owners. Individuals may co-own property as tenants in common, joint tenants, or tenants by the entirety, or lastly community property. Color of title. The legal concept of a claim to title appears legally valid, but in fact, the claim is defective. Collateral. Something of worth promised to a lender as security, mortgage, for an obligation. Commercial property. Commercial property is a property that generates an income or salary. Commission. A commission is a fee paid to an agent for performing a transaction. Community property. Community property laws are based on the idea that husband and wife are equal, separate partners, rather than one whole one-like tenants by the entirety. Comparable. Another word for properties sold in the same area is seen on a property report. Comprehensive Environmental Response, Compensation, and Liability Act of 1980, CERCLA. Also known as the Superfund. The Superfund is a United States federal government program designed to fund the cleanup of sites contaminated with hazardous substances and pollutants. Condemnation. The procedure used by a public or private entity with the powers granted from eminent domain to take privately owned real estate. Condominium. A condominium is often shortened to a condo. Is a type of living space similar to an apartment, but independently sellable and therefore regarded as real estate. Conspiracy to boycott. Conspiracy to boycott occurs when two or more persons or entities conspire to restrict someone's ability to compete. This is unethical and highly illegal. Constructive eviction. Constructive eviction is a term used in the law of real property to describe a circumstance in which a landlord either does something or fails to do something that he has a legal duty to provide.
Real Estate A1 TV executive producer, director, author, chief editor, real estate professional, multidimensional and multifaceted artist Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Constructive fraud. Constructive fraud is best described as ignorance or lying without knowing you are lying. Contingent property. A contingent property means an offer for the property has been accepted, but there is a condition or contingency written into the contract, which must be met before the sale can go through. Contract. An agreement by law between two or more parties. Corporation. Corporations may be formed for profit or non-profit purposes. A corporation is managed and operated by a board of directors. A corporation has certain rights, privileges, and liabilities beyond partnerships. Doing business as a corporation has its advantages and disadvantages. Cost approach. A real estate appraisal method that states the price a buyer pays for a property should equal the cost of building an equivalent building on the property. Counteroffer. A counteroffer is similar to a purchase agreement. If a counteroffer is made, the original offer ceases to exist because legally the seller has rejected it. Cash out refinance. Cash out refinancing is a way to turn your equity into cash. Let's say you own a home worth $250,000. You have $100,000 in equity and owe $150,000. You can refinance by setting up a new $200,000 loan with your lender and receive $50,000 cash at closing. Chain of title. A chain of title is a document containing all previous property owners, listed in chronological order from the first owner to the present owner. Clear title. A clear title shows the undisputed legal property owner. This means there are no liens or levies from creditors or other parties that may cause legal confusion. Compound interest. Compound interest accumulates from both your principal balance and interest owed. On a loan, you will progressively owe more interest. On an investment, you will progressively make more money from compounding interest. Chain of title. Clear title. Contingency. A contingency is a condition that must be met before the sale is legally binding. For example, a buyer can make their offer contingent on a satisfactory home inspection. If this contingency is not met, the sale may fall through. Conventional mortgage. Private lenders fund conventional mortgages rather than government-backed agencies. Most often, these loans are then sold to government-sponsored enterprises like Fannie Mae or Freddie Mac to provide liquidity to the nation's mortgage market. General agent. A general agent is an agent hired who can perform all acts associated with a particular business that a principal has appointed the agent to. These relationships are typically continuous. General contractor. A general contractor is the term used to describe someone whose main responsibility is the construction, improvement, or renovation of a property or project. General warranty deed. A deed where the grantor, seller, guarantees he or she holds clear title to a piece of real estate and has the right to sell it to the grantee, buyer. Government power. Government power is the constitutional authority and inherent power of a state to adopt and enforce laws and regulations to promote and support public health, safety, morals, and general welfare. Real Estate A1 TV executive producer, director, author, chief editor, real estate professional, multidimensional and multifaceted artist Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Government survey system. This method of appraisal is a federal system defined by identifying reference lines. The system is based on two intersecting lines, principal meridians and baselines. It is sometimes referred to as the rectangular survey system. Grant. The transfer of title to real property. Grantee. The legal term for the buyer. Grantor. The legal term for the seller. Gross lease. A gross lease is a rental agreement for the use of the property where the tenant pays a fixed amount, which does not change due to changes in the various expenses of the property. Gross national product, GNP. The total price of all goods and services produced annually inside a country. Gross rent multiplier. The ratio of the price of a real estate investment to its annual rental income before accounting for expenses such as property taxes, insurance, and utilities. More specifically, it's a measure of the value of an investment property obtained by dividing the property's sale price by its gross annual rental income. Cost of funds index. Lenders use this index to adjust their interest rates on adjustable rate mortgages. Cost of funds index uses changing economic conditions to provide a statistic on current market interest rates. Census. An official count of the number of people living in a certain area, such as a district, city, county, state, or nation. The United States Constitution requires the federal government to perform a national census every 10 years. The census includes information about the respondent's sex, age, family, and social and economic status. Certificate of eligibility. The document given to qualified veterans, which entitles them to VA guaranteed loans for homes, business, and mobile homes. Certificates of eligibility may be obtained by sending DD-214, separation paper, to the local VA office with VA Form 1880, Request for Certificate of Eligibility. Chain of title. A history of conveyances and encumbrances of a property from some starting point, whereby the present owner derives title. Channeling. The illegal practice of directing people to, or away from, certain areas or neighborhoods because of minority status, steering. See fair housing. Chattel. Personal property. Cleaning fee. A non-refundable fee charged by a landlord when a tenant moves in. The fee covers the cost of cleaning the rented premises after you move out, even if you leave the place spotless. Cleaning fees are illegal in some states and specifically allowed in others, but most state laws are silent on the issue. Landlords in every state are allowed to use the security deposit to clean a unit truly dirty. Clear title. A land title that doesn't have any liens, including a mortgage, against it. Closing. The conclusion of the sales transaction when the seller transfers title to the buyer in exchange for consideration. These proceedings are usually held at a title company.
Real estate, a 1TV executive producer, director, author, chief editor, real estate professional, multidimensional and multifaceted artist Kashif Sohail, and our entire team of hundreds of presenters want to educate you about real estate. Closing costs. Costs the buyer must pay at the time of the closing, in addition to the down payment, which may include points, title charges, credit report fee, document preparation fee, mortgage insurance premium, inspections, appraisals, prepayments for property taxes, deed recording fee, and homeowners insurance. Closing costs can vary considerably from one financial institution to another. Closing statement. A detailed written summary of the financial settlement of a real estate transaction, showing all charges and credits made, and all cash received and paid out. Cloud on title. A claim or encumbrance that may affect title to land. Co-op. Cooperative housing or cooperative sale. Compound interest. Interest computed on the principal and any unpaid accumulated interest. Contrast with simple interest. Cost of funds index, COFI. Debt to income ratio. Co-tenants. Two or more tenants who rent the same property under the same lease or rental agreement. Each co-tenant is 100% responsible for carrying out the rental agreement, which includes paying the entire rent if the other tenant skips town, and paying for damage caused by the other tenant. Collateral. Something of value deposited with a lender as a pledge to secure repayment of a loan. Commingling. The illegal practice of combining or mixing clients' funds with the agent's own funds. Commission. The compensation paid to a licensed real estate broker or by the broker to the salesman for services rendered, usually a percentage of the selling price of the property. Community Reinvestment Act. The federal law, which requires federally regulated lenders to describe the geographical market area they serve. Deposits from that area must be reinvested whenever practical. Comparable. Properties similar to a particular property are used to compare and establish a value for that property. Condemnation. The act of taking private property for public use, through due process, under the right of eminent domain, with compensation to the owner. Condominium. A form of real estate, usually a dwelling with individual ownership of separate portions of the building plus shared ownership of the common areas. Closing costs. Costs the buyer must pay at the time of the closing, in addition to the down payment, which may include points, title charges, credit report fee, document preparation fee, mortgage insurance premium, inspections, appraisals, prepayments for property taxes, deed recording fee, and homeowners insurance. Closing costs can vary considerably from one financial institution to another. Closing statement. A detailed written summary of the financial settlement of a real estate transaction, showing all charges and credits made, and all cash received and paid out.
Real Estate, a 1TV executive producer, director, author, chief editor, real estate professional, multidimensional and multifaceted artist Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Consideration. The price or subject matter, which induces a contract, may be in money, commodity, exchange, or transfer of personal effort. Constructive eviction. The provision of housing that is so substandard that, for all intents and purposes, a landlord has evicted the tenant. For example, the landlord may refuse to provide light, heat, water or other essential services, destroy part of the premises or refuse to clean up an environmental health hazard, such as lead paint dust. Because the premises are unlivable, the tenant has the right to move out and stop paying rent without incurring legal liability for breaking the lease. Usually, the tenant must first bring the problem to the attention of the landlord and allow the landlord to take reasonable time to make repairs. Consumer Credit Counseling Service. A national nonprofit agency that, at no cost, helps debtors plan budgets and repay their debts. One major criticism of CCCS is that voluntary donations primarily fund each office from the creditors who receive payments from debtors repaying their debts through that office. The goal of CCCS is to ensure that consumers repay the debts they owe. CCCS may arrange easy payment plans that increase the chances of repayment, but harm a consumer's credit in the process. Agreeing to a payment plan and following it to the letter may not stop creditors from reporting delinquent repayment information to credit bureaus for each month the payment falls short of the previous minimum amount. Contingency. A provision in a contract stating that some or all terms of the contract will be altered or voided by the occurrence of a specific event. A common example is a buyer who enters into the purchase of another home before his current home is sold. The buyer usually asks for the seller to make the sale contingent upon the sale of the buyer's current home. If the seller receives another offer for the property, the first buyer must either agree to buy the home without any contingency, or step aside and let someone else purchase the home. Contract. A legally enforceable agreement to do, or not to do, a particular thing for consideration. Contract for deed. A contract for the sale of real estate where the deed, title, of the property is transferred only after all the payments have been made. Also known as a land contract, agreement of sale, conditional sales contract, or installment contract. Buyers should be wary of this type of contract, as they can lose their entire investment if the owner declares bankruptcy before the deed has been transferred. Contract for exchange of real estate. A contract for the sale of real estate in which the consideration is paid wholly or partly in real property instead of cash. Contract of sale. The agreement between the buyer and seller on the purchase price, terms, and conditions necessary to both parties to convey the title to the buyer. Conventional loan. A real estate loan, which is not insured by the FHA or guaranteed by the VA. Conveyance. Written instrument, such as a deed or lease, that evidences transfer of some ownership interest in real property from one person to another. Real Estate A1 TV executive producer, director, author, chief editor, real estate professional, multidimensional and multifaceted artist Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Cooperative housing. 1. A form of real estate, usually a dwelling in which residents own shares, but do not directly own the space they inhabit. Rather, owning a share of the building entitles the shareholder to inhabit a certain space within the dwelling, such as an apartment. Shares are usually proportional to the amount of space in each apartment. 2. A living arrangement in which residents must perform certain duties or chores to benefit the entire residence, in addition to paying room and board. A common form of dormitory living. Cooperative sale. A sale of property in which the buyer is brought to the transaction by a real estate agent who works for a different real estate broker than the listing agent. Brokers or companies have agreed to cooperate in closing the property, and typically split the commission. Offers of cooperation and compensation are commonly found in the MLS property listings. Cost approach to value. An estimate of value based on current construction costs, less depreciation, plus land value. Contrast with the income approach to value and the market data approach to value. Counteroffer. The rejection of an offer to buy or sell that simultaneously makes a different offer, changing the terms in some way. For example, if a buyer offers $160,000 for a home, and the seller replies he wants $175,000, the seller has rejected the buyer's offer of $160,000 and made a counteroffer to sell at $175,000. The legal significance of a counteroffer is that it completely voids the original offer, so that if the seller decided to sell for $160,000 the next day, the buyer would be under no legal obligation to pay that amount for the property. Covenant. a restriction on the use of real estate that governs its use, such as a requirement that the property is used only for residential purposes. Covenants are found in deeds or in documents that bind everyone who owns land in a particular development. Covenants, conditions, and restrictions. The restrictions governing the use of real estate are usually enforced by a homeowners association and passed on to the new owners of property. For example, CC and RS may tell you how big your house can be, how you must landscape your yard, or whether you can have pets. If property is subject to CC and RS, buyers must be notified before the sale takes place. Credit Bureau. A private, profit-making company that collects and sells information about a person's credit history. Typical clients include banks, mortgage lenders, and credit card companies that use the information to screen applicants for loans and credit cards. There are 3 major credit bureaus: Equifax, Experian, and TransUnion, and the Federal Fair Credit Reporting Act regulates them. Credit File. See Credit Report. Credit Insurance. Insurance a lender offers or requires a borrower to purchase to cover the loan. If the borrower dies or becomes disabled before paying off the loan, the policy will pay off the remaining balance. Federal and state consumer protection laws require the lender to disclose to existing and potential borrowers the terms and costs of obtaining credit insurance, because it can affect the terms of the loan.
Real Estate A1 TV executive producer, director, author, chief editor, real estate professional, multidimensional and multifaceted artist Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Credit limit. The maximum amount you can borrow under a home equity plan. Credit score. In the mortgage lending world, credit scores either make or break you when it comes to obtaining a home mortgage or getting the best rate you can. There are 3 different scores available to a mortgage lender, each being generated by the 3 different credit agencies. Creditor. A person or entity, such as a bank, to whom a debt is owed. Cul-de-sac. A dead-end street which widens sufficiently at the end to allow an automobile to make a U-turn. Capitalization rate. The rate of return on an investment. Capitalization. The process of converting into present value a series of anticipated future periodic installments of net income. CC and RS. This is regarding homeowners associations and is sometimes called private police power and is enforced by court actions, not by city zoning officials. CC and RS are used in condominium developments. CRV, Certificate of Reasonable Value. It is the Department of Veterans Affairs appraisal. Client. A principal is the person who employs an agent. Cluster zoning. The zoning, which allows violations of setbacks between units, even touching, to allow even greater common areas. COLD. The acronym for duties owed by an agent to his client is COLD, which means care, obedience, accounting, loyalty, and disclosure, the most important of which is loyalty to your client, even ahead of your best interests. Color of title. If you show you have a superior right to a property, with some evidence of the claim. Community property. Property acquired during marriage and owned equally by both spouses. Separate property. Property brought into the marriage by one spouse, or property received as a gift or inheritance to just one spouse during marriage. Eminent domain. The legal process involved under eminent domain in the taking of privately owned property for public uses in exchange for just compensation. Conditions. Requirements of one of the parties to a transaction, or the other, or both. Conditional commitment. An FHA appraisal. Conditional use permit. A permit granted to an owner to build a specific purpose property inconsistent with zoning. Condominium. Real estate which has the 3rd dimension in its legal description of height and is called an air lot, or where you actually own a box of air. Conformity. General consistency with surrounding uses, usually resulting in the highest and best use of the property. Consideration. In a contract, both parties must give something to each other. Construction loan. Money borrowed to improve the real estate offered or collateral for the debt. Contingency. A provision in a contract that requires completion or that a certain event occurs before a contract becomes binding. Contribution. In appraisal, the valuing of an improvement according to what the market would pay, regardless of the actual cost. Conventional loan. A residential loan made without the added security of FHA insurance or a VA guarantee. Conventional life estate. A life estate created intentionally by the owner-grantor. Legal life estate. A life estate created by statute, not the owner-grantor.
Real Estate A1 TV executive producer, director, author, chief editor, real estate professional, multidimensional and multifaceted artist Kashif Sohail, and our entire team of hundreds of presenters want to educate you about real estate. Cooperative or co-op, where tenants form a corporation to buy a building, and each owns stock in the corporation and gets a proprietary lease to a unit. Corporation. A legal entity, legal person, allowed by law, separate from their shareholders. Corporeal. Corporeal has physical substance. Incorporeal are intangible things, such as rights. Correction lines. These are used in the government survey to compensate for the curvature of the earth. These are spaced every 4 townships or 24 miles. Cost approach. In appraisal, the valuation approach estimates how much money is needed to replace the subject property with an equally desirable property. Covenant. A promise to do or else refrain from doing or not doing some specific act. Curable. Deficiencies in property that may be physically and cost-effectively corrected. Chain of title. A chain of title is the historical documentation of all previous owners of a piece of property. If all the data is available, it's a record spanning from the very first owner to the current. Clear title. Also known as a clean title, a clear title means there are no liens from lenders against the current owner. If there were liens, then the ownership of the property could be thrown into question, but a clear title indicates the current ownership is undisputed. Comparable sales. Comparable sales are one of the metrics used by appraisers to determine a property's value. By looking at properties in a similar area with similar assets recently sold, an appraiser can reasonably assume they are worth a similar amount. Call option. A call option is a contract that gives one party the right to buy and another to sell a piece of property at a future time and specific price. Cash-out refinance. A cash-out refinance, also known as a cash-out refee, is when a homeowner refinances their mortgage for more than it's worth and withdraws the difference in cash. To qualify for this type of financing, a borrower usually needs at least 20% in equity. Certificate of eligibility. During the VA loan process, lenders require veterans to show proof they've met the minimum service requirement to qualify for a VA loan. Certificate of reasonable value. The Department of Veterans Affairs issues a Certificate of Reasonable Value, CRV, and requires veterans to receive a VA loan. It establishes the maximum value of the property, and therefore the maximum size of the loan. Chain of title. Like a blue book for homes, the chain of title is the documentation of all past ownership of a property. It runs from the present owner to the very first owner of the property. Clear title. Also known as a just title, good title, or a free and clear title, a clear title doesn't have any kind of lien or levy from creditors. It means there's no legal ownership of the property, such as building code violations or bad surveys. Closing. Closing is the final stage of the real estate transaction. The date is agreed upon when both the buyer and seller go under contract on the home. On the closing date, the property is legally transferred from seller to buyer. Closing costs. Closing costs usually comprise between 2 to 5% of the total purchase price of the home.
Real Estate A1 TV executive producer, director, author, chief editor, real estate professional, multidimensional and multifaceted artist Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Co-borrower. If a buyer is having trouble getting approved for a loan, they can elicit the help of a co-borrower. This person is usually a family member or friend who's added to the mortgage and guarantees the loan. They're listed on the title, have ownership interest, sign loan documents, and are obligated to pay monthly mortgage payments if the buyer is unable to. Commission. Real estate commission is generally 5 to 6% of the home's sale price. That commission is usually split between the buyer's and seller's agents, and is paid by the seller at the time of closing. Common area assessments. If you pay a monthly fee towards a homeowners association (HOA), part of that fee likely goes toward a common area assessment to maintain an area open to the community. Community property. Community property refers to property acquired by a married couple and owned equally by both spouses. Comparable sales. An appraiser uses comparable sales to determine how much a home is worth based on what other similar homes in the area have sold for recently. Only homes with legally closed count as a comp, and most lenders and insurance providers require appraisers to use at least 3 closed sales. Construction loan. A construction loan, or self-build loan, is a short-term loan used to finance the construction of a home or real estate project. This type of loan covers project costs before long-term funding can be financed. Contingency. If a property is contingent or the contract contains a contingency, certain events must transpire or the contract can be considered null. A contingency might be that the home must pass an appraisal or receive a clean inspection. The sale of a home could also be contingent on the buyer selling their home by a specified date. If either the buyer or seller fail to meet the expectations of the contingency, either party can exit the contract. Contingent vs. Pending. When a property is contingent, it means the owner has accepted an offer, but certain contractual expectations must be met or the offer will be void. If all contingencies are met, the property changes status to pending. While contingent offers are still considered active listings, pending offers are taken off the market and other offers will not be entertained. Conventional mortgage. A conventional mortgage is a loan not guaranteed or insured by the federal government. These borrowers usually make larger down payments, at least 20%, don't require mortgage insurance, and are at a lower risk of defaulting on their home loan payment. Convertible ARM. A convertible adjustable rate mortgage ARM allows buyers to take advantage of low interest rates by receiving a loan at a teaser loan interest rate. Their monthly mortgage payment stays the same, but interest rates fluctuate, usually every 6 months. The borrower can convert their ARM to a fixed rate mortgage, but there are generally fees for the switch. Cost of Funds Index, COFI. A cost of funds index is an average of the regional interest expenses acquired by financial institutions. It's used to calculate variable rate loans. Calendar year. A year using the actual number of days in each month for 365 days in a year, 366 days in a leap year.
Real Estate A1 TV executive producer, director, author, chief editor, real estate professional, multidimensional and multifaceted artist Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Cap. The maximum allowable increase for either payment or interest rate for a specified amount of time on an adjustable rate mortgage. Capital gains. The profit on the sale of a capital asset, such as stock or real estate. If you sell your primary residence, you can exclude $250,000 in profit from capital gains tax. A couple can exclude $500,000. Capitalization. The estimation of the value of income-producing property by dividing the annual net income by the capitalization rate. Capitalization rate. The rate of expected return on investment property. A ratio of income to value. Cash out. Receiving money back when refinancing your present mortgage. See Homestead. See C&R. See Covenants, Conditions and Restrictions. CCCS. See Consumer Credit Counseling Service. Ceiling. The maximum allowable interest rate over the life of the loan of an adjustable rate mortgage. Canvassing. The practice of searching for prospective clients by making unsolicited phone calls and/or visiting homes. Common elements. The parts of a property that are necessary or convenient to the existence, maintenance, and safety of a condominium or normally in common use by all condominium residents. Common law. A body of law based on custom, usage, and court decisions. Comparable. The sold properties, listed in an appraisal report, are substantially equivalent to the subject property. Composite depreciation. A method of determining the depreciation of a multi-building property using the average rate at which all buildings are depreciating. Conforming mortgages. Securitized mortgages sold on the secondary market that meet certain requirements established by Fannie Mae and Freddie Mac. Contract for deed. A contract for the sale of real estate under which the sale price is paid in periodic installments by the purchaser, who is in possession and holds equitable title, although the actual title is retained by the seller until final payment. Contract for exchange of real estate. A contract for sale of real estate in which the consideration is paid wholly or partly in property. Contributory value. An appraising principle where the value of a property's component parts is measured by their effect on the selling price of the whole. Cooperative. A residential multi-unit building whose title is held by a trust or corporation owned by and operated for the benefit of persons living within the building. Correction lines. The horizontal provisions in the rectangular survey system are made to compensate for the curvature of the Earth's surface. Cycle. A recurring sequence of events that regularly follow one another, generally within a fixed interval of time. Capping. The process of laying 2 to 4 feet of soil over the top of a landfill site, and then planting grass on it to enhance the aesthetic value and prevent erosion. Carbon monoxide. A colorless, odorless gas that occurs as a byproduct of fuel combustion, which may lead to death in poorly ventilated areas. Change. The appraisal principle that no physical or economic condition remains constant. Cost recovery. An IRS term for depreciation. Corrective maintenance. Correction of problems after they have occurred. Controlled business arrangement. An arrangement that offers consumers a package of services.
Real Estate A1 TV executive producer, director, author, chief editor, real estate professional, multidimensional and multifaceted artist Kashif Sohail and our entire team of hundreds of presenters want to educate you about real estate. Let's conclude. Constructive mortgage. A short-term loan used to finance the building of improvements to real estate. Constructive notice. Notice of a fact given by making the fact part of the public record. Contract for deed. A contract for the sale of a parcel of real estate in which the buyer makes periodic payments to the seller and receives title to the property only after all, or substantial part, of the purchase price has been paid or regular payments have been made for 1 year or longer. Courtesy. The statutory or common law right of a husband to all or part of real estate owned by his deceased wife, regardless of will's provisions, recognized in some states. Capacity of parties. The legal ability of persons to enter into a valid contract. Commingled property. Property of a married couple so mixed or commingled that it is difficult to determine whether it is separate or community property. Clue. An insurance company repository for reported claim activity and previous property damage. Claim of right. Used as a factor in determining adverse possession claims. Capital gain tax. A tax charged on the profit gained from the sale of a capital asset. Capital investment. The initial capital and the long-term expenditures made to establish and maintain a business or investment property. Casualty insurance. A type of insurance policy that protects a property owner or other person from loss or injury sustained due to theft, vandalism, or similar occurrences. Cash flow. Certificate of sale. The document is given to a purchaser of real estate sold at a tax foreclosure sale. Certificate of title. A report stating an opinion on the status of a title based on the examination of public records. Chattel's mortgage. A loan in which personal property is pledged to secure the debt. Charrettes. Community planning tool that welcomes and improves public participation in discussions about a community's future growth and development. Confession of judgment clause. Permits judgment against a debtor without the creditor having to institute legal proceedings. Constructive annexation. The combination of items into real property that are not fixed or fastened to the property. Check. Tracts of land are located repetitively every 24 miles from a principal meridian and 24 miles from a defined baseline. Codicil. A supplemental document to a will that adds to or amends the original terms. Coinsurance clause. A clause in insurance policy specifying the minimum percentage of value that must be insured to collect the full amount of loss. City Planning Commission. A local governmental organization designed to direct and control the development of land within a municipality. Commercial property. Property used to produce income, such as an office building or a restaurant. Common law. The body of law derived from customs and judicial precedents developed in England. Competent parties. Persons legally qualified to enter a contract, usually meaning they are of legal age and sound mind.